Have you ever vaguely thought about people that trade crypto and wondered, what the heck does that even mean? All you may know is that some people buy Bitcoin and hold it, where others trade it like Pokemon cards. Let's break down what crypto trading really is. Okay, so what is crypto trading? The basic definition is buying and selling cryptocurrencies to make profit. Plain and simple. This involves three things: predicting price movements up or down, understanding what comes with short-term and long-term trading, which is important to know because that's how you determine how much profit you keep for yourself after making sure Uncle Sam gets his. Number three, knowing that trading is different from just investing and holding. It's about timing. You're actively jumping in and out of positions to profit from the price swings, whether it's going up or down. So where can you go to get in on this action? Where does it happen? Well, starting with the most common options first, most beginners start off using centralized exchanges like Coinbase, Kraken, and depending on where you are in the world, Binance. For decentralized options, for my friends that want to trade with a little less oversight, you have more options like Uniswap, PancakeSwap, and Jupiter. If you're not trying to be too fancy, you can even do just straightforward peer-to-peer trading, which you will see often written as P2P trading. So what types of crypto traders are there? Well, there are day traders, who are people that make trades fast, usually reviewing charts by the minute or hour. Swing traders, people that hold for a few days or weeks. Scalpers, rapid fire profits, they review charts by seconds and minutes, which is what I meant by rapid fire profits. You have holders, which are not technically traders. They're more or less just people who believe the value of the asset is going to go up over time. So they're in the market, just not really or actively trading. Then, of course, you have algorithmic traders, which is just people that use bots to do most of the work for them. A pretty big question you might ask is, what are the tools of the trade? How do I access these markets for trade? Well, my friends, the most common tool I see used, and one that I use for myself, is called TradingView, which is free to download and use if you're a beginner and you're just trying to feel your way around. I myself am learning so much about this amazing tool with so many features. Some cool indicators that really do put a unique spin on the user experience. Of course, when you get into the application, this tool is going to hold many attributes that you will be looking for, like candlestick charts, some well-known indicators like RSI, which stands for Relative Strength Index, MACD, which is Moving Average Convergence Divergence, as well as volume and many more. Now let's be adults about this. We can't talk about all this good and neglect the risk of crypto trading. Crypto by itself is highly volatile with very big swings, leverage dangers, scams, and unfortunately, rug pulls. It's not for the weak, I can tell you that much. The risk on crypto trading can send you on a real emotional roller coaster. So all you can do is hold on with both hands if you're willing to accept the risk and come along. Now that we've talked about the tools and the risk, how do we start trading? I recommend picking a centralized exchange like Coinbase if you're in the US and Binance if you're in Europe. Practice with small amounts and use demo trading just to feel your way around before jumping off into the deep end and catching a rude awakening. Learn basic chart reading and keep this as a rule of thumb. Never trade what you cannot afford to lose. To wrap all this up with the bow, please remember that trading can be exciting, but it's not a game. Learn first and then earn. With all that being said, I hope this video blesses you and the value multiplies you. Until next time, I'm out.